While everyone was busy watching Nvidia, arguing about tariffs, and pretending to understand what the Fed is doing, something absolutely insane happened in the background. And nobody noticed. Silver is trading at $90 an ounce. $90. 90. Not a typo. Not a glitch. Not my screen having a mental breakdown. 1 year ago, silver was at $26. That's a 246% gain in 12 months. On a shiny, boring, your grandma has some in a drawer rock that your financial advisor has never once mentioned. 6 months ago, it was $34. It's nearly tripled since then. 1 month ago, and I really need you to hear this, silver was at $52. It's up over 70% in 30 days. 30 days. That's not a commodity. That's a meme coin with a marketing budget. I've seen tech stocks move like this. I've seen crypto move like this. I've seen literal Ponzi schemes move like this. But silver? The metal we use for jewelry, and solar panels, and killing werewolves? This isn't supposed to happen. This is the kind of move that ends careers, starts conspiracy theories, and makes CNBC producers spill coffee on their keyboards. And yet somehow, the entire financial world is asleep at the wheel. Go on financial Twitter right now. Go check CNBC. Go ask your buddy who thinks he's a trader because he bought Nvidia once. Nobody is talking about this. Gold hits an all-time high, and it's front-page news for a week. Silver quietly goes on the most violent rally of any major commodity in decades, and the financial media is busy writing articles about whether millennials are killing the napkin industry. So either I'm losing my mind, or something massive is happening that nobody wants to talk about. And I'm going to figure out which one it is. Because when a boring asset class starts putting up numbers that would make a venture capitalist blush, something is very, very wrong. Or very, very right. Depending on whether you own any. Now, the first thing everyone says when silver moves is, gold went up, so silver followed. And look. Sure. Technically accurate. Gold is at all-time highs. Gold has been ripping. Gold is the main character of the precious metal story, and silver is supposed to be the sidekick. The Robin to gold's Batman. The Scottie Pippen to gold's Michael Jordan. But here's the problem with that narrative. Over the last year, gold is up about 35%. Solid. Impressive. Great work, gold. But silver? Silver is up 246%. The sidekick just outscored the main character by 7x. That's not following. That's mutiny. That's the backup dancer stealing the show and starting a solo career, while the lead singer is still trying to figure out what happened. So no, this isn't just silver follows gold. Something else is going on. Something structural. Something that the precious metals move together crowd hasn't wrapped their heads around yet. And it starts with the fact that silver has an identity crisis. One that's about to make a lot of people very rich or very confused. Because here's what most people don't understand about silver. Gold is simple. Gold sits in vaults. Gold looks pretty. Gold is money. That's it. That's the whole job description. Gold has been doing basically the same thing for 5,000 years, and it's pretty good at it. But silver? Silver is having an existential moment. On one hand, silver is a precious metal, a store of value, a hedge against chaos, the shiny thing humans have been obsessed with since before we invented writing. On the other hand, silver is an industrial metal, and not in some niche, decorative way. I mean, in the entire modern economy literally cannot function without it kind of way. And right now, both of those identities are being pulled in the same direction at the same time. The precious metal buyers want it because they're scared of inflation, the dollar, the national debt, and the general sense that the financial system is held together with duct tape and vibes. The industrial buyers need it because you cannot build the future. AI, solar, EVs, 5G. Literally anything involving electricity, without massive amounts of silver. When both sides of the market are fighting over the same limited supply, you get what we're seeing right now. A 246% move in 1 year. And potentially a whole lot more to come. Which brings me to the part nobody expected. When people think about AI, they think about software, algorithms, chatbots writing mediocre poetry and occasionally threatening humanity in science fiction movies. What they don't think about is the physical infrastructure required to run all of this. The data centers, the servers, the cooling systems. The mind-boggling amount of hardware required to make a computer pretend to be intelligent. And all of that hardware? It needs silver. Every data center, every single one, requires silver for electrical connections, thermal management, circuit boards, and about 100 other components I don't fully understand, but definitely exist. Right now, Microsoft is spending $80 billion this year on AI infrastructure. Amazon is spending $75 billion. Google, Meta, Oracle. They're all in an arms race to build more data centers, faster, bigger, and more power-hungry than anything we've ever seen. And every single one of those facilities is eating silver at a rate that would have seemed absurd 5 years ago. But it gets better. Or worse. Depending on your perspective. Because while AI is busy consuming silver from one direction, solar panels are absolutely demolishing it from the other. Here's a number that should make you uncomfortable. Every solar panel requires approximately 20 grams of silver. In 2024, the solar industry consumed over 273 million ounces of silver. In 2025, that number is expected to exceed 350 million ounces. For context, and I really need you to focus here, total global silver mine production is only 820 million ounces per year, and it's been declining. So solar panels alone are now consuming over 40% of all the silver we pull out of the ground. One industry. 40%. And growing. Add in EVs, which use 2-3x more silver than traditional cars. Add in 5G infrastructure, which requires silver for every antenna and base station. Add in medical devices, smartphones, computers, and literally anything that needs to efficiently conduct electricity. You're looking at demand that is growing exponentially, while supply is, well, supply is a complete disaster. And I don't say that for dramatic effect. I say that because it's mathematically true. Silver has been in a supply deficit for 5 consecutive years. We have been consuming more silver than we mine every single year since 2021. In 2024, the deficit was 265 million ounces, the largest on record. In 2025, it's expected to be even worse. And here's the part that should terrify you. Unlike gold, where mining companies will move mountains, literally, to find more, silver is usually just a byproduct. About 70% of silver production comes from mining copper, zinc, and lead. Nobody's building billion-dollar mines specifically for silver. It just kind of shows up as a bonus. So when demand explodes and we need more silver, we can't just mine more. The supply isn't elastic. It takes 10, 15 years to develop a new mine. And even then, most silver comes from other operations anyway. We're stuck. Demand is accelerating. Supply is declining. And the gap is being filled by draining above-ground stockpiles. COMEX silver inventories have collapsed by over 70% from their peak. London vaults are hemorrhaging metal. The safety net that was supposed to cushion any supply disruptions? It's almost gone. This is like watching someone drain their savings account by 70% while their expenses keep going up, and acting like everything is fine. It's not fine. The math doesn't work. And this brings me to the part that the chart nerds have been waiting for. The gold to silver ratio. For anyone who skipped that day in commodity class, which is everyone because that class doesn't exist, the gold to silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio averages somewhere between 41 and 61. But for most of the last decade, it's been sitting at insane levels. 81, 91. At one point during COVID, it touched 121. That was the market basically screaming that silver was historically, absurdly, almost comically undervalued relative to gold. And every time in history that ratio has stretched that far, it eventually snaps back. Hard. In 2011, silver ran 500% and the ratio collapsed to 32:1. In 2020, silver ripped 140% in 5 months as the ratio compressed from 120 to 70. With silver now at $90 and gold around $3,400, the ratio has dropped to about 38:1. That's finally in line with historical averages. But some analysts think it's going to overshoot. That silver could keep outperforming even from here. And given the supply-demand fundamentals, that's not a crazy argument. Because gold just sits there. It's shiny, it's valuable, but it doesn't do anything. Silver gets used, silver gets consumed. Silver disappears into products and never comes back. That distinction matters more than most people realize. Now let's zoom out. Because silver isn't rallying in a vacuum. Gold is at all-time highs. Bitcoin is at all-time highs. Real estate, art, collectibles, basically anything that exists outside the traditional financial system is going up. And that's not a coincidence. Central banks have been buying gold at record pace for 4 consecutive years. Over 1,000 tons annually. They're not just diversifying. They're hedging against a future they don't fully trust. 20 years ago, 70% of global reserves were held in US dollars. Today, that number is 57% and falling. Central banks aren't panicking. They're not dumping dollars into the ocean. But they're quietly, slowly, methodically reducing their exposure, moving into hard assets. Things that don't require trusting another country's central bank to not do something stupid. Gold is the obvious choice. But silver? Silver is the accessible version of that trade. Gold at $3,400 an ounce is expensive. The average person can't stack gold bars in their closet without taking out a second mortgage. But silver at $90? That's still within reach for regular people who are starting to get nervous. And when regular people get nervous, they don't buy gold. They buy silver. In massive quantities. All at once. Which brings me to the part that makes this genuinely explosive. The silver market is tiny. Like, embarrassingly tiny. The total value of all investable silver on Earth is somewhere around $180 billion. Sounds like a lot, until you realize that's less than Nvidia moves in a single trading session. Apple's market cap fluctuates more than that during Tim Cook's lunch break. So when real money starts flowing into silver, institutional money, sovereign wealth money, retail FOMO money, there's simply not enough metal to absorb it without prices going absolutely vertical. We saw this in 2021 when Reddit tried to squeeze silver. Dealers sold out overnight. Premiums spiked to 50% above spot. The physical market basically broke for a few days. That was with a coordinated retail push that ultimately fizzled. Now imagine what happens when the same supply-constrained market faces genuine, sustained institutional demand during a structural deficit. You get $26 to $90 in 12 months. And potentially a lot more to come. So let me summarize what we're looking at. Silver was $26 a year ago, $34 6 months ago, $52 a month ago, and $90 today. That's not normal. That's not supposed to happen. And the reasons behind it are even crazier than the move itself. Industrial demand is exploding from AI, solar, and EVs. Supply has been in deficit for 5 straight years. Above-ground stockpiles are almost gone. The gold-silver ratio finally snapped after a decade of distortion. Central banks are signaling that trust in traditional systems is eroding. Retail investors are piling in. And the market is so small that moderate inflows cause outsized moves. Put all of that together and you get a chart that looks like it was drawn by someone who just discovered what up means. Is it overextended? Probably. Will there be pullbacks? Almost certainly. Markets don't move in straight lines, and anyone telling you silver is going to $200 next week is either lying or selling something. But the fundamentals haven't changed. If anything, they're accelerating. The deficit is getting worse. The demand is growing faster, and the supply isn't coming back. So either this whole thing is one giant illusion and silver crashes back to earth tomorrow, or we're watching one of the most significant commodity repricing events in modern history happen in real time. And nobody is talking about it until now. Let me know what you think in the comments. Because if there's one thing silver investors love more than silver, it's arguing on the internet about silver. I'll see you in the next one.